Hi guys, it's Ian Coleman. It is the 2nd of June 2021. It's 8:55 in the morning in the UK. This is my second attempt at the morning video. The first one was over 15 minutes and I couldn't get it into the YouTube channel. So second attempt. We hit some decent levels yesterday. We've seen some decent follow through this morning. Not to be the bearer of bad news, but I think there's some sort of warning signs out there that we might not see as much follow through price action as was originally forecast. But I'm going to go through the charts first. So this is the dollar. So just to go back to big picture analysis, we want to be catching this leg up. We've had 15 days of consolidation. We are starting to move now. Reverse head and shoulders. We need to break here to confirm the formation. And this is where the small caveat comes in. Now, we had this pattern on yesterday. So this was, let's just get rid of that for a sec. So basically we had an extension tool coming off here. We said this lines up really well. Okay, we want to get down to this level to push higher. We've only got to the 78.6% pullback level now. That, even though we have seen a move to the upside, I've got support here. It says expires at 11 a.m. I've got dollar support, got dollar buying this morning. We are moving higher, etc., etc., etc. The fact that it didn't go down to this level could be a warning signal. I know I've got that head and shoulders. I would have much preferred a move to 119.05 because what could happen now is we could get this. Could. And that's why it's essential that the dollar breaks this previous high to confirm that head and shoulders pattern. Got to monitor this level here between 78.6% and 88.6% for a potential CD leg. And if that does come in, then we're going to see a deeper move to the downside. But at the moment, we are bullish. At the moment, we are moving higher. At the moment, the levels that we talked about yesterday in sort of euro dollar and sterling dollar are holding up pretty well. Let's have a look at the other single currencies. This is the euro basket. I've had BT look at my internet connection yesterday. Supposedly there's nothing wrong with it whatsoever, but these charts just seem to be taking quite a long time to load up. But anyway, again, nice confluence area. We move lower, we've come back up, and then we're pushing back down again today. It was great levels, but my bespoke indicators have not given me any decent reversal patterns inside here, which again is a bit of a concern, because if you remember, we were talking about this the other day and how messy it was and which leg we're potentially in on this bigger time frame, and hopefully we're in this BC leg and not in a higher leg up towards this sort of level. But at the moment, it's looking negative, just on the basis of this time frame here. Sterling has got to be the favoured play, if you like. If we look at this chart, we've got a bearish outside day at our resistance level. Now, a bearish outside day is my favoured chart pattern. It basically means that the price made a new high. It then reversed aggressively and closed lower. The Marabuzzo level, which comes in around about here, is actually holding back the correction today. But the reason why I like sterling is because, or dislike sterling, I should say, is because the potential move is quite deep to the downside, and that's what I want to be catching. Now, again, there is scope for a mild correction today as we move up in a BC leg, and on this chart here, so this was the pattern that we played yesterday. On this chart here, 119.95 is the resistance level. Just notice in the last hour as well, that dip, even though it looked quite aggressive, that's just been bought into again. So there is scope for some upside pressure in sterling. Let's have a quick look at the others. Swiss, I like up here. Three reasons I like it up here. To sell it, sell Swiss franc higher. Basically, we've got this confluence area which is very tight. We've also got this. Okay, so that's my monthly bespoke resistance, which is at 300.49. We've got a 50% pullback level at 302, and this is at 299. So a nice confluence area to the upside. At the moment, really in no man's land. Yen. Now, yen has got the same issues as the dollar as far as I'm concerned. If we go to this chart, this is what we played or have been playing since the 28th of May, and we've moved higher. That's an impulsive move to the downside overnight. 90.66 break 10 a.m. It needs to get past that level before 10 a.m. Otherwise, we could see a deeper correction, and you can see that at the moment this is being sold into. So this could happen. So again, really complicated charts. I was hoping that we could move higher in this leg from this formation, but the fact that we haven't broken that level by 10 a.m. or not yet anyway, and the fact that we didn't get to 88.6% on this leg lower yesterday, and the fact that this just looks like a channel. So there's loads of reasons why we could see a deeper correction, and we've got this down here. So 90.16, 90.12. Are we going to see a deeper correction? That last move up needed to breach here to confirm that we're in that CD leg, and it hasn't. So what's happened now is that this could now be the BC leg. So it's getting pretty messy out there. What I do like about this as well, 90.16, 90.12, if we go to the daily chart, we've got a 261.8% extension level here at 90.14, and these just look like inside days. That's previous support, becomes resistance. So again, is there scope for a move lower? Are we going to see risk appetite build over the next couple of days as this last push to the downside in risk currencies? Dollar CAD, sort of no man's land. Big picture is bearish. Intraday picture is pretty mixed. We've got a decent confluence area here. Aussie dollar, and again we caught quite a nice confluence zone yesterday, and it started to move lower. But there's been little in the way of follow through selling, and I think we could push back up now. New Zealand dollar, again, big picture is for selling rallies higher, but intraday we could see a deeper dip to buy into. So most of these single currencies have issues, if you like. I think the only one that's looking solid, if you like, is sterling, and that's because we've got a resistance level, we've got a bearish outside bar on the daily chart, we've got a big picture analysis on the daily chart, etc, 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 whereas the others are pretty mixed. So when I'm looking excuse me, when I'm looking at the cross currencies, this was basically our level in euro dollar, and it is starting to move to the downside. The potential here is still pretty good, so it's looking nice, but the dollar has got to play out and the euro has got to play out, and I haven't got the euro at the moment. Blah 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 blah. So sterling dollar, we're in this wedge formation. I've got resistance today at 141.98. What could happen here is could sort of move back up, maybe form an inside head and shoulders pattern. So that would be the left shoulder, this would be the head, right shoulder, and then breakout. A clear breakout of 141.30, and the measured move target is down here at 140.004. What I should say here is often when we break out of a wedge formation, it will go back towards previous support levels, and then it will come and retest. So do I favor trading the break? No, I don't, because normally if I trade the retest, you can probably get a better entry. So trading a break, if you sort of said, well, I need to give it 10 points, so maybe get in at 141.20. If you traded a retest, you might get in at 141.50 as it moves back up, because obviously time will make this trend line higher. Hope that makes sense. So at the moment, I'm looking at this level. If it breaks, then I'm looking for a retest for sterling. Sterling yen. And again, I think you really need to look at big picture analysis here. Got this lovely pattern on the 8-hour chart, and we've moved aggressively lower. That was the push down yesterday. Are we going to see a higher correction? Well, if we go to this chart, this is the 1-hour chart. We've got resistance here. You can see the red line. That's coming in at 155.49, and then I've got resistance here at 155.88. So I'm wondering whether or not we're going to push up, get to this level, this resistance level, and then push down in the BC leg, and then up in CD to then complete. But I don't want to be buying these legs. I want to be selling these legs as far as I'm concerned, because the big picture is for lower sterling. The other sterling crosses, really not a lot going on, to be perfectly honest. So just to reiterate, the baskets, apart from sterling, are moving in the directions that we wanted them to, but there's risk that they might not get to the levels that we've originally planned. Sterling looks like the favored single currency. Sterling dollar wedge formation, sterling yen potential inside bat formation to take these two sterling based crosses lower. Okay, guys, I hope that all makes sense. Hope it's not too confusing. Please follow my channel if you want to get the video analysis straight to your inbox. It's just Ian Coleman. Okay, guys, take care, and I'll be back soon with some more insights. Many thanks.